Hello, my name is Michael Glass from emini-trading-coach.com, where we focus on developing high probability trading setups. Before we begin our video, we want to talk about our disclosures. Any symbols that we use today should not be inferred to the trading recommendation. No matter what form of investing that you choose, stock, forex, futures, or options, they all have a level of risk associated with them. You can lose your money. Trade at your own risk. And any investment decision that you make is solely your own responsibility. So we're going to talk about our technical analysis wrap-up for January 22nd, 2011. When we look at the week that was, we can see that the three major indexes were split. The Dow Jones was up for the past week, while the NASDAQ and the S&P 500 fell for the week. 6 out of the top 10 sectors fell, and our market, as you can see, has hit its first hiccup in a while. We really haven't seen a down week since November. Some overseas news is that China reported a robust GDP growth, which has some inflation concerns on whether or not they're going to try to slow down their economy. But the big thing this week was the corporate news of the week. We had two banks miss earnings. Bank of America and Citigroup both missed, while Goldman Sachs, Wells Fargo, and Morgan Stanley beat expectations. Now, that is a little bit of maybe half of the story, because Goldman Sachs reported after the Apple and IBM blowout on Tuesday after the close. IBM and Apple blew it out, but the Goldman Sachs before the open the next day didn't meet expectations. It beat the numbers, but it didn't meet expectations, and that's what really sent the market wailing. As the financial goes, so goes the market. So we saw that maybe the sentiment is changing a little bit. Maybe these earnings are not meeting people's expectations, especially on the technical companies. Google blew it out, Apple blew it out, IBM blew it out, but the financials are weak. The economic news for the week basically continue to show that the economy is improving, or certainly not as much as we want. We're still in the 400,000s for the jobs claims, and we really need to get that down into the 300 handle to start seeing the the unemployment go down. When we look at what's coming up this week, we do have more earnings: McDonald's, Steel Dynamics, United States Steels, Yahoo, Boeing, Caterpillar, Netflix, Amazon. But I think we're going to go more economic this week. We got consumer confidence on Tuesday. We got the FOMC rate decision on Wednesday, Michigan sentiment and GDP on Friday. So I think economic events will be driving the market this week. When we pull up our calendar, we can see that on our technical analysis, we can see that we're still in an uptrend by the dip. Confirmations, we want to close above 1300. That's what we talked about last week. Resistance is 1295. That's for our little minor swing high here this week. Support is 1250-ish, and the 20 exponential moving average. Our point of interest, again, is going to be the psychological barrier of 1300. So let's pull up the charts and take a look. Okay, so as we pull up the chart, we can see a couple nice things. As we talked about, our support, 10 moving average was support. Now it's the 20 moving average. The blue line is a 20 moving average. We are looking at the S&P 500 on a daily chart. So here you can see the 20 moving average. When the market pulled back, hit the 20 moving average, we did bounce. And those of us who were looking at intraday on Thursday certainly traded that. And then this line right here is our horizontal support. This is where we pull back and hover for a little bit. That's that 1250-ish that we talked about. So to confirm our uptrend, we need to break above the high here, which was about 1290-ish. And of course, you can see our 1300 psychological barrier. Now, we can see with our indicators on the daily chart, the pullback did bring us off a little bit into the middle. The pullback was good. We're still a little high, overbought on MACD, still overbought a little bit on RSI. It's our stochastics. Now I have to go back and check the settings to make sure these are really where I want them to be. You can see I'm using a different site right now since Thinkorswim is down for today. What I will show you is, let's start off where we began here, and we'll draw it on out. Clearly a nice uptrend. As we came down a base and we wanted to see where we were going to go, we came right about here, and there's our second part. of the uptrend. Oops. Actually, let's grab you. Come right back on down. There we go. Now, you can see something else happened here. We started here, came up here, we got a nice candle going, but you can see what was going on here in the middle. So I'm going to take the trend line one more time, trying to match this up here. Right in here, and drawing on up. And what do you see? We see that once we broke out of this tight channel and made a new support, what was once support now became resistance as we came up. We'll try to extend this up a little bit more. And you can kind of see it's always, what is the A team? I always love it when a plan comes together. I always find it very interesting to see when these technical indicators just work perfectly. So you can see we came up, we're hitting these, and backing off, hitting these, backing off, hit here and back up. So the question is, will we run right back up, where we're projecting at the 1300 level, or will we now break back down to the longer term uptrend line? To pull back, a little bit larger time frame, go to the weekly. Weekly is all basically overbought still, and you can see the tight range that we're in here. Even longer to the monthly, and the monthly is also just about getting to the overbought level. Overbought on stochastics, not yet on MACD. Getting there on RSI Wilder. So again, we have to be cautious. That the pullback we had was good. We're gonna need to see if we're gonna run back up to the top of the channel on a daily chart, or is there more pullback in mind? But keep in mind, we do have some economic data this week. We got the FOMC could say something in their minutes. The consumer confidence could say something, or even GDP, or we could have some more bad earnings that could move the market. So we have some catalysts this week. Volume is starting to return, and now we just have to see what the true sentiment of the market is after a great 2-month December-January run-up. For our educational portion of our video, we're using Trade Your Way to Financial Freedom by Dr. Rand Thornton, using setups, filtered versus setups. And here, he talks about how, and again, remember what we always say, that many traders make the mistake by making their setup their system, but the setup is just a portion of it. You still got to have your rules, how you're going to enter, how you're going to protect your capital, how you're going to manage the trade. And here he goes into that a little bit further by saying, yes, filters are important, but the filter is not the setup. Chuck LeBeau actually goes against him at his own seminars, where he says that people can use filters in the past to trade any market. However, trading a live market, those filters tend not to work. And basically what he's saying there is that, and we all see this, people put up charts and say, oh, look at this indicator, it caught this move, and here's another chart, and ooh, look at this indicator, it caught this move. These indicators work in the past, and you can find an indicator, it's sort of like statistics. I can make statistic prove almost anything if I interview the right people or use the right test subject. Well, indicators are the same way. If I use the right charts and the right indicator, I can prove anything. So that's why it's important to have filters, but also to have the next level of your setup to actually, that confirmation that actually says, okay, I've gone through, I filtered it out. Now this is my confirmation. What are my entry rules? So you guys know we're on Facebook, YouTube, and Twitter. We've got great resources to you. First, our free 5-part video course on how to develop a high probability trading setup, which will give you a prelude, an introduction to our video and how our video curriculum and how thorough it is, and that you may choose to buy that. And you guys know, you guys looked at it, most of these series are $3,000-$4,000. Our video series is $250 and comes with a bonus free coaching session. And so, we're not trying to break the bank. We're trying to give you the resources that you need to be a successful trader, because we believe in mentoring versus setups. And we can help you build that psychological capital that you need to place the trades. And finally, you know about global futures, and you know that we've taken this Trade Your Way to Financial Freedom and developed a 8-video series on how to develop a trading system. Again, we give you these free resources because you can find it all on the internet as it is, but it's coaching, it's internal structure that will make you take that step from being an inconsistent trader to a profitable trader. Because again, it's all out there. You can purchase a system, you can have a new indicator, but if in the end you don't pull the trigger, you haven't changed your trading results at the end of the day. And that's what we at Emini Trading Coach are all about. Thanks guys, and I'll see you next time.